Expectations are moderate. I don't think we're seeing euphoria in the market, which is a good thing, but we can't expect asset returns to climb the way they did in the first half of the year. They were motivated by the Fed. The Fed has showed its hand, basically, and the markets aren't going to get much more than what they expect. So whether that expectation is realistic or not, it kind of stops there, and there's not going to be a much more of a push to grind higher, at least as far as we can see right now.
What are the big worries within earnings season?
Well, there's quite a few. We have a really interesting market with both bonds and stocks rallying, so that the inverted yield curve is problematic in terms of what financials are going to do, and financials are becoming a larger share of the S&P. And of course, we have all these macro conditions weighing on earnings, slowing global growth, trade tensions. That's going to weigh the big performer, which is tech stocks. That's what's led the market higher. Can we reach new highs and sustain them if tech kind of takes a slagging back seat with global trade tensions?
Charlie, you personally are pretty optimistic about earnings. You think expectations too low?
Yeah, we like the fact that people are so negative. We would actually say they're not moderate on earnings. I think people are very nervous about earnings. And we would call out banks in particular. There was a slowdown in M&A activity in the second quarter. Energy and material stocks, we would also say, could be soft. But we think expectations are so reasonable that there's a good chance that people are going to beat those expectations.
But why do you think that people are so worried about earnings? The market soars every day to a new record high, despite flat earnings we've seen so far this year.
As we discussed, the best environment is when people are pessimistic. And what you've got to be careful about is when everybody's optimistic.
And earnings are the goose. I mean, earnings really drive the markets higher, and eventually, if earnings run out of gas, you have to expect that the car doesn't go as far as it could.
Neela, you're actually going a positive call on EM at the moment, is that right?
We are. And not because we are positive at the moment, but we are long-term investors. We are here for the long haul, and we see things in EM that are good for long-term investors, namely higher dividends, attractive valuations, and we think a trade deal happens. If China rebounds, if a trade deal occurs, we're going to see that carry over into emerging market stocks. That's good for the long-term investor.